Good morning, everyone. Welcome to our Friday morning trading room. Woohoo! End of another week. Here we go. So Fridays have been our rabbit hole Fridays, but believe it or not, we're starting to run out of indicators. I didn't think that would happen, but here's the issue with indicators. We have a gazillion of them here in our assortment. And actually, we have a whole lot of toys at Indicator Warehouse as well. I should probably feature some of those so you can see how those work out. The problem is a lot of these indicators you're going to find end up working the same. I've tried to show you some of the more unique ones, but I think what we're going to do is, Keith, I believe, gave the suggestion, why don't we alternate weeks? Why don't we trade one Friday and do a rabbit hole the next week? And that sounds like a pretty good suggestion to me. So maybe this Friday we will trade. If the market is really dull, we'll pull something out of the hat. Interesting to see how the market has been rallying the last few days. The NASDAQ, of course, the daily chart. Look at what's been going on with the volume. Volume tapering as prices attempt to go higher. Volume increasing somewhat, or like I say, volume is a difficult indicator to interpret because everything is relative, but volume increasing a little bit as prices go down and then decreasing as prices are trying to go up. That's not that encouraging for the buyers. But here we are in a little bit of an uptrend. So it would stand to reason when the market attempts to get back down toward these lows, and these lows sitting somewhere around the 72.50 mark, which we know was a very popular number yesterday. We're probably going to see more buying pick up, so kind of keep that figure in the back of your mind. You can shoot a trend line this way as well, in which case we have just breached the trend line. Actually, that trend line is going to make a very nice little channel. We have breached the trend line, and as a result, there might be a little bit of a bearish pushback here. I guess we'll wait and see. Right now, things looking a little constipated. I should have pointed this out before I put the Raptor away. We've got all this candy striping going on in the background. And that's usually a sign that the market doesn't have much of a trend. You know, if we keep flipping on signals. If you're looking to take advantage of your first in-sync signal here on the Eagle, I think it just fired. Oh, actually it did shortly after the opening buzzer right here, your red bar buy. So you would be looking for a little bit of a bullish move, and it looks like we're going to get that. Do I have a second chance to get in? Oh, I can do it here on the Falcon. I'm going to have a trend change signal. All right, so I'm just buying in here on the hash mark. Pull the stops a little bit. I know this is unusual for me to take this early signal, but it looks like all the ducks are in the row, so I'm going to give it a whirl. Bollinger Sweet is bullish. It's a trend change signal. We've got an uptrend, you know, on the daily. Maybe we can get a little giddy up. There we go. Okay, and bring my stops to break even now, and hooray. Okay, well, that was relatively painless. Fridays are funny. You know, you can have some very good Fridays. A lot of times the market will get busy early on a Friday. Oh, looks like they might be establishing something resembling a trend. I'm okay taking my profit on target though. You won't hear me complaining too often about taking profit. Oh, look at that little move. Okay, so that, you know, having a little extra follow through, looks like we've reached our, well, actually we surpassed our eagle target here a little bit. So a very, very strong move out of the open. Definitely giving the market a bullish flavor here to finish the week. Well, to start. This day's not over yet. The Bollinger's starting to get a little bit flat. I don't know if I want to try to get in again at this point. You know, if you end up missing a trend, yeah, like Keith comments, I hate it when I'm slow on the entries, especially when it rockets off like that. It happens. We all miss them. We all miss big moves. And so now the problem is, well, where do I get in? When the market makes a strong move, somewhere through this move, there will either be a pullback or a little bit of a sideways phase, a pause. This is what you want to be on the lookout for. We know the direction. Now we just need to fine tune our timing. Now, there's absolutely nothing wrong knowing the trend just to hit the buy button. I tried to show you this the other day. We know the trend. We hit the buy button. We get into the trade. The problem is not the direction. The problem is the stop loss. If we're going to keep our stops 2 swings back, well, sorry, here I'm just trying to clean this up a bit. If we're going to keep our stop loss 2 swings back, I can't have my stop loss right here. This is swing 1. This is swing 2. But this is obviously an amount that I can't afford. You know, from 73.55, say, to 73.15, that's 40 points. That's 160 ticks. There's no way I can afford that. So you're going to need to wait for this sideways range, or you just gamble. Otherwise, you wait for the sideways range, or you wait for the pullback. And if you happen to luck out and just get in when the market breaches the last swing high, then you can breathe a little easier and you can bring your stops up. The best stop for this type of trade is right here, below the last swing point. Of course, if you took profit on target, that's even better. Otherwise, you could trail. If you wanted to be more aggressive, you could trail below the last bar with a tail. But yeah, when the market is trending, direction is not the problem, of course. Stop placement is the problem. Getting into the trade is easy. Deciding where to place your stop so you don't get tagged too early, that's the difficult part. See, here we are up at our eagle target again, and we're starting to get that reaction. So, well, that one worked out a little bit better than the example I tried to show you the other day. Okay, so we're getting a little bit of a pullback now. We may be entering that sideways phase I was talking to you about. You see how the Bollingers have dipped here? May have some profit taking going on. After all, that's a killer move. If we're trading for real, and this was my Friday session, and I've done my 2 trades, both of which are profitable. I want to mention yet again, I know I do it every day, but for the benefit of those who are new in the room who may not have heard it before, my day would be done. So I've met my 2 trade quota. I'm in the black. My day is done. So we're up. What are we up right now? 265. We'll say 250 for easy math. And I know you're thinking, well, that's great, Eric, but I can't make a living on $250 a day. Yes, but that's where the power of multiples comes in. That's $250 on a single contract. So when you have the ability to trade 2, 3, 4, 5 contracts, all of a sudden, that humble $250 becomes $500, $750, $1,000. David asks, what's the indicator at the bottom? Is that MACD? That is part of the Bollinger Band suite. That was one of the original Rabbit Hole Friday tools we featured. And if you go back, if you'd like to know about it a little bit more, you can go here to theindicatorwarehouse.com and tap your little search button and type in Bollinger Suite. This is the one you want here, the Bollinger Suite. And I'll explain it again here briefly. The video is still Ninja 7, but of course it works the same. And you can do the Bollinger Suite with all types of different indicators here. It allows you to play with it. You can set alerts. I haven't set a lot of the alerts. But I was so impressed with how the Bollinger Suite worked that I actually, after that Friday, I just left it on my charts. The Bollinger Suite, you can treat it just as another filter if you like. What we're looking for is pardon me, the Bollinger Suite to be in sync with the signal. So for instance, back here, this number 3 signal that developed, after all this sideways choppiness, you may be thinking, oh, do I dare? Is the market going to go up? Is it going to go down? Should I just sit it out? Well, usually we would just sit it out. But with the Bollinger Band Suite, you can see that, okay, the Bollingers are starting to become in sync with the signal. In fact, they came in sync one bar after the signal printed. So it kind of confirms this second push entry opportunity that we may be looking at. So we can enter up here, 2 swings back, our stops could go there. That's fairly reasonable. That's within my wheelhouse. That's about 200 bucks. And then of course, you get the nice follow through. Or if you missed the first signal and you're looking at the second signal, well, you can see the Bollinger Suite is very strong at this point. So if the indicator is trading above the Bollinger Suite, we're bullish. If it is trading below the Bollinger Suite, we are bearish. And if it's above the halfway point, we're bullish. If it's below, we tend to be more bearish. And of course, if it trades within the Bollingers, it's either going to be a period of transition or sideways chop. So let me show you, I believe this last signal that we were looking at, say right about here. No, that one was already bearish. Funny, this one did not print as a number 2 signal. I guess the retest must not have been enough. But visually, you can see it's a number 2 signal. We have a trend, a retest of the trend, a failure. And when that printed, you can see the Bollingers were already very, very bearish. So if you were open to counter trend signals, you may have thought about shorting that one. But this signal right here that printed, we were actually against the Bollingers. The Bollingers already getting a little bit more bearish, a little bit neutral. It did get up to its profit objective, but right after, boom, she starts to unwind to the short side. So like I said, I found it a very helpful tool, a very helpful filter. I liked it so much, I just left it on there. Oh, another good question here from David. Hold on. Okay, so David's checking the reports at Forex Factory. Let's bring that over. Okay, yes. Ooh, they are a couple of red envelope reports here. Yeah, the non-farm payroll is the big one. So non-farm employment, that's pretty significant. So David's question is, I have a market question, Eric. Forex Factory showed many red folders this morning at 8:30 a.m. Eastern jobs report. Right after 8:30, the market's jumpy. Now 5 minutes after the market open, the market screams higher. Is it better to assume that even though a report is at 8:30, it will have more effect when the market opens? You know, before 24-hour trading, I would have said yes, most definitely. But now you could actually begin trading at 8:30 because the volume is there. A lot of the volatility is there, as you pointed out. Traders don't usually wait for the market open to do stuff. If you go back in your charts and you highlight the 5:30 mark, you're going to find a lot of times the market starts to get very busy from around 5:30 on. Sorry, that's Pacific time, so 8:30. From 8:30 on. I think today, David, it's a little bit more of a fluke that the big move came after the open. I don't know. I'm thinking about it. It's a great question. See, I'm a little bit stuck because I don't pay that much attention to the reports. I just trade what's going on the chart. My logic is, well, it's twofold. First off, there are a lot of people smarter than I am. I am not the smartest trader in the world, as evidenced by many of my trading days. So I'm certainly not the guy in the know. So that's reason number one for me not really paying that much attention to the reports. Reason number two is I don't have the ability to move the market. I'm not Citibank, I'm not Goldman Sachs, I'm not one of these monster companies that can influence the market and move it higher or lower. I figure my job as a trader is to see what the big boys are doing and then just get on the right side of the trade. And how do I do that? Well, I do that by focusing on higher probability opportunities. So, well, the Raptors easiest to point that out on because we have our high probability signals. Staying with trend as much as possible. That's always a biggie. You know, here we're getting a number 3 signal, but the market's kind of sideways, so maybe I'll take advantage of a second push opportunity and look to enter if the market makes a new high and actually gets outside of this trading range. Or maybe I'll let it get outside the trading range and then I will look for a retest of sorts. So I try to do certain things to keep myself on the right side of the market as much as possible. If your chart is jumping all over the place, that's usually a good time actually to avoid trading. Again, just my opinion, but if I see a really quick move higher or lower, I think the market does that to try to entice a bunch of traders to reach for the buy or sell button because they think the market's exploding. And then, of course, what happens is it turns around and goes the other way. So if you see this really violent move higher, that one that you get a dozen bars exploding in a matter of seconds, it seems like the market just waits long enough for everybody to tap their buy market button, and then it goes the other way. So if I'm watching a jumpy market, if I'm watching a lot of bars unfolding very quickly, if I have a level head, I'll usually try to step back from that. Okay, we'll get this a little bit higher. There we go. So now the signal's printed. And so this is my second push opportunity on this number 3 signal. Number 3 signal right here. The market's moving sideways. I'm not going to even entertain a counter trend signal. So there's the breakout now above the recent highs, right? A little high back here, the high right here. This is the retest of that. Come on. Okay, at this point, I can get more serious about rolling my stops, because this is, again, the buyer's attempt. This is the retest. I've got a couple of bull bars in my favor. If the buyers give up at this point, I'm probably just as well to get out of the trade. Once they breach that, there we go. I'm going to take my trade to break even now for the same reason. Come on, you stinkers, get up there. Oh, giving me a little bit of a look back. Don't want that. So I could save a couple extra dollars there. Probably got out of that too early. I do expect the market to get up here, though. I just didn't wait it out. But I guess, David, in response to your question, I just tried to trade. Oh, see, there they go. Okay, now you see how that exploded there to the top side? Watch it come down now. As everybody scrambles and hits their buy market button. So if I were not finished before, I would definitely be finished now. I have my 3 trades in. Definitely met my trade quota. I'm profitable on the day. Picked up another little scalp on that move had I not been quite so aggressive with my stop. I would have been able to hold on for my bigger profit, but oh well. Okay, well, they're still trickling up. So this wasn't that difficult to spot, to see coming, because we knew the market was in an uptrend. Here was that little sideways phase that we anticipated, and then here now is the next push up. So as soon as we had the pullback, we should start looking for buying opportunities. Okay, well, we are definitely watching a strong bull day today. Now we're kind of stuck again, waiting for. Well, here we go. We're seeing a little bit of a pullback again. Our trend mode is winding down a little. Okay, another little push up. Okay, and the pushes higher are starting to slow and become a little bit more frequent. So I don't know. Are we going to see a little bit of a pullback here? The trading band is hovering around 50 ticks. Well, look at this. The Bollinger Suite really bearish again. The Falcon working a little bit of a trend change. We haven't really got a number 2 signal printing yet on the Raptor, but you know what? It's a demo room. Why don't we demo? So I'm going to take a look. If we get a little bit of a test of the extreme here, I will entertain selling the next signal very, very short term. I don't want to get too bearish in this strong bull market. Very small test of the extreme. Very small. Am I going to get a Falcon signal? Oh, I do. I've got the Falcon signal. We may have to do this on the Falcon then. All right, so here's my trend change signal. So are we going to get a bigger test of the extreme now? We've got a first micro macro cross already here on the hawk. Okay, we're going to see if maybe, no, we're not getting a warning here yet either. So as far as the Raptor programming is concerned, we haven't tested high enough to actually get a number 2 signal to print, but that is kind of what we're looking at here. Well, here we go. We're perhaps retesting a little higher. There we go. Okay, so we're getting a possible number 3 signal. You can tell here from the background highlight. So that would be our hard edge bounce. That would be with trend. That's probably the better trade here. Okay, so there's the number 3 signal. You could do a second push opportunity on that one, but I'm going to hold out here for the counter trend. You see how that number 3 signal was not in sync with the Bollingers. So here now is the number 2 signal. Okay, so let's see if in fact, okay. Okay, this hard edge here is going to be a little problematic. We are in sync again with the Bollingers. Okay, I'm going to get ready here with my stop loss. If the market heads lower and gets somewhere around that second hard edge, I want to be sure to get my trade to break even. Come on. The trend is really trying to kick in here. right, we've got the market retesting this swing high. This is why it's important you keep your stops, or try to keep your stops 2 swings back. If I can get a couple of bearish bars here in my favor, I can consider rolling my stops down. Note the bounce off of the hard edge. The hard edge always, we have to respect the hard edge because the market may react there. Oh, look at this. Trend trumps all. Okay, so this move here again, this move right here is a retest of this. Again, just reinforcing why we want to keep our stops a little bit further away, if at all possible. So I'm giving this market the best chance it has at a reversal. Come on. These types of trades, you really test your patience because the temptation is to jam the stops in really tight. But we've got to, we've got to give the trade some room. If we had a reason to try to short it, we have to let the trade do what it needs to do. Whenever you take a trade, you should always consider your stop loss amount gone. If you can't afford this amount right here, if you can't afford this amount, don't take the trade. Because there is such a thing as a proper stop. And if you're not trading a proper stop, well, then you're just kind of asking for it. Now, to me, that's not quite the same as getting tagged because you rolled your stop early on a break even. Probably should be the same, but it's not. Not to the way I think about things. All right, here we go. Back to the hard edge. Let's see if we can breach the hard edge this time. Come on. Last chance. Oh, they're not going to do it. Came back with yet another hard edge bounce. Actually produced a number one signal because the clouds were slightly out of sync here for a bar or two. Sellers, you got to step up. Give me a couple bars lower, and that will give me a good excuse to roll my stops in. In fact, I could probably roll my stops already. Stop it. All right. Why are you not allowing me to roll my stop? Okay, we'll do it the old-fashioned way. Oh, look at that little bounce up. So that quick little move, when I see those things happen, I always think the market's trying to, fool a few people into getting themselves on the wrong side of the trade. Okay, well, we're still trying. I'm going to keep going sideways here for a little while. I'm halfway tempted to roll my stop back up, but oh well, we'll run it out the way it is here. The better stop is above this high. No, didn't give it to me. Pardon me. Well, there you go. A good example of why you want to have a trade quota and how important it is to stay with trend. The other with trend trades, even the one, remember that I did here where the market was already well underway. What is going on here with my charts this morning? You know, where the market was well underway, I had to run a ultra deep stop to start. Just the fact that we're with trend was huge. But the moment you try a counter trend trade, no, counter trend trades, if you want to improve your trading right away, eliminate your counter trend trades, especially if there's an obvious trend. All right, let's put that away. Nice little run up there. Wow, look at that. I am most impressed here with what the bulls have done here today. Oh, wow. Okay, well, what a nice way to finish the week out. A very bullish week. And you know what? This is going to totally change the tone of the marketplace. How we were looking at what are they rallying on? I was expecting this volume bar to be up here somewhere. I was going to say this is totally going to change the marketplace into when you see these types of rallies. What you expect to happen next, assuming the bar will finish like this, is that we're probably going to get a little counter push at the beginning of the week. Maybe a little 2-day, 3-day counter push. And then it's going to be decision time. The market's probably going to try to get a little bit, no, I can't move it, a little bit bullish, maybe for 1 or 2 days, and then we'll have the market pinched. We'll know that we can short below there, we can buy above here when we get that like that, just like we do with the Eagle or the Raptor when we have that little reactionary period. And from here, the market will either head lower, but what right now to me seems more likely is that it's probably going to head higher. And we're probably, over the next few months, probably going to see the market develop into a bit of a sideways trading range. That's my 2 cents anyways. You heard it here first. We'll have to see how that volume closes out, though. You would suspect such a strong move would have more volume associated with it. So here we have another situation where the market's on a tear, and the direction is not the difficult part. The timing is the difficult part. Well, it's been a pretty active morning so far. We are an hour into the session. Hard to believe it's only been an hour. The reason I point that out is very often if there has been a trend on the day, the market will try to reverse on the trend about an hour into the day. And I think that has more to do with profit taking. I don't know if I would trust any kind of, well, you shouldn't trust counter trend moves anyways. Let's put it that way. Well, we are slowing again a little bit. You know, for these breakout kind of moves, it's easiest to see it on the eagle. And I like to see at least a couple of bars against at this point. You could place your just in case order to buy, just in case the market decides to take off on another tear. Honestly, I don't know how much it has left in it. There was the eagle, you typically will make two legs. So there's leg one. And this is leg two. So I wonder whether the market is actually spent at this point. But there's no denying the trend. Like I've mentioned before, the trend, the direction, not the issue. Stop placement, that's the issue. If we go two swings back, there's swing one, here's swing two. That's a little crazy. Where's the next profit target? Well, if we're, and we have a resistance line right above us, that's going to be a little cozy. Okay, so let's go back here and see now how this is going to work out. First off, we are in scalp mode, and we're supposed to be in scalp mode for the next half hour. We'll see how that plays out. Usually if I'm in scalp mode, I will consider taking profit on target rather than swinging for the fences like this. Well, we could also try to do a bit of a measured move. We could say, okay, that was that move there. This is the move here. Now that seems a little more reasonable. Why don't we bring that in? Don't want to make the market work too hard. And ideally what I'd be looking for, well, we just breached this little swing high. The idea is that once you breach a swing high, you can roll your stops up below the last swing low. This was such a little itty bitty one. See, usually what you would do is, let's say you entered right here, your initial stop would be back here, and you would hold your stop until you broke that swing high right there. Now your stop would come up to here. And then you would hold and hold and hold, and now that you've breached there, your stop would come up to here. That's how you need to trade your stops if you're trying to take advantage of a bigger trend in a move. Not an easy thing to do. All right, well, we'll see how this winds out. You can see we've already lost a lot of momentum. Market moving much slower. Okay, so we've hit our swing target, which is 5 points. And if I were smart, I would probably take it. Well, if nothing else, today was a great example of the importance of trend. Getting that little bit of a pullback now. They might have been a little bit late with their 1030 reversal. Okay, next push up. That's my cue to get more aggressive with the stops. Ideally, you want to see 2 bars in your favor, but the morning's getting a little spent here, so I'll be a little bit more aggressive. And once again, we're just about to the swing target. There we go. Got the swing target again. And let's see if we can get above that little high. See the little pop-up that we get? Because we're trapping traders. We're trapping out sellers, traders who tried to get cute with the market and tried to short the uptrend, thinking, oh, this must be the top. Ha ha ha. Okay, let's squeeze it really hard now.
Order filled. Order canceled.
Okay. Wow, that was all right. Good little morning here overall. You can tell, though, things definitely slowing. All right, gang. What do we call it a day? If you are going to continue trading today, I think you got to stay with the trend. I would not be surprised to see the market kind of settle into a little bit of a sideways range. That doesn't mean there won't be opportunities. A move back to the hard edge would definitely get me interested in looking for another rally up toward the top end of the trading range. And you can see our trading cloud here getting a little bit broad, so a pullback not out of the question. But I would not get too carried away on the short side. Have yourselves a great weekend. I will talk to you again on Monday. See you then. Bye for now.